Dissolution of partnership. The following is the balance sheet of Hari, Giri and Suri as on 31st March 2018. So students, they have given us the balance sheet and the question says that the firm is dissolved on the above date. The assets realized as follows: bills receivable 3,850, debtors 5% less than the book value, and unrecorded asset realized rupees 150. Suri took over land and building at 10% more than the book value. The bills payable are taken over by Hari. The expenses of realization are rupees 450. Prepare realization account, partners capital account and cash account. So as per the question, students, we understand that the firm is being dissolved. From the balance sheet, creditors and bills payable, we will write it in realization account as it is in their book value, followed by the capital of the partners, which will reflect in partners capital account. On the asset side, we have both cash and bank account. So as per the question, we have bank balance as 4,000 and cash balance as rupees 2,000. So they have asked us to prepare cash account. So we will prepare cash account as per the question and show the bank account balance. Followed by, we have bills receivable, stock, debtors, land and building, which will reflect in realization account in their book value. In case of profit and loss account, this will reflect in partners capital account. The firm is dissolved. So over here, the assets are realized. So bills receivable, debtors, both are realized. Land and building is being taken over by the partner. Whereas in case of stock, nothing is being mentioned in the question. Then how do we treat stock? So read point number 1. If no information is given about the realization of asset, take the balance sheet value of the concerned asset and realize it in full value. So therefore you need to show that on the credit side of your realization account. So what is the amount? It is 9,400. We are going to realize fully. In case of liabilities, we have bills payable, which is taken over by Hari. So if Hari is taking over bills payable, then what will happen to creditors? Read note number 2. If no information is given about the payment of liability, then you need to assume that liability is being fully paid. So therefore, in realization account, on the debit side, you will show creditors being paid off through bank as 2,400. Cash or bank, here we will be treating as in the form of cash account. And the last point is expenses of realization amounted to rupees 450. This we will be showing it in a realization account and as well as in the cash account. The question is silent, students, with respect to their profit sharing ratio. So therefore we will take and assume the profit sharing ratio as 1:1:1. Let's prepare realization account, students. For this we need to follow the balance sheet. So therefore from the liabilities side, let's write the amounts as it is. So first and foremost, we have creditors. Amount is rupees 2,400, followed by bills payable 5,400. On the asset side, cash and bank, both will go to cash account. Then we have bills receivable. So write it as bills receivable, amount rupees 4,000, followed by stock 9,400, debtors 3,000. We have a provision for bad debts. This need to be settled. So write it on the credit side. And the last item is land and buildings. Amount rupees 12,000. So that's it with the first step in realization account. Let's follow the adjustment. The first adjustment is with respect to assets which are being realized. So write it as by cash account, assets realized. The first asset which is realized is bills receivable. Amount is rupees 3,850. The next one is debtors. Value is 3,000 less 5% on the book value, 2,850. They have not mentioned anything about stock, which is rupees 9,400, which is now fully realized in its book value. In the question, they have mentioned about an unrecorded asset. So therefore, let us write this as well. Unrecorded asset, value rupees 150. So if you add the realization of assets, it's going to be 16,250. Let's follow the next adjustment. Over here, Suri took over land and building at 10% less than the book value. So therefore, partner is taking over the asset. Write it as by Suri's capital account. He is taking over land and buildings at a value of rupees 10% more than the book value. Amount is 12,000. Add 10% more. So what will be the amount? It is 13,200. The next adjustment is bills payable are taken over by Hari. So before that, we need to pay the liability. What is the liability? Creditors rupees 2,400. So first make the payment through cash account. Liabilities paid. There is only one liability which is being paid, whereas bills payable is being taken over. So full value we will take it. Creditors, there is only one amount, so directly write it in the outer column as rupees 2,400. Follow the next adjustment. It says Hari is taking over the bills payable. So Hari's capital account, bills payable taken over. Amount is rupees 5,400 at its full book value. The last adjustment is with respect to realization expenses of rupees 450. So this is being paid through cash account. Realization expenses, amount rupees 450. Realization expense is rupees 450. So that's it with the preparation of realization account. Let's do the balancing. On the credit side, if I do the totaling, the amount is going to be 37,550. Whereas on the debit side, the amount is going to be 36,650. So here we are going to get the highest amount on the credit side, written as 37,550. If you reduce 36,650, we will get realization profit rupees 900. So distribute this among the partners. So write it as 2 partners capital account. The partners are Hari. His share is 1/3 into 900, 300. Giri, 1/3 share, same amount. Suri, 1/3 share, same amount. So if you add everything, you are going to get rupees 900 as realization profit. Students, you need to remember we have cash account, amount as rupees 2,400. Again, we have cash account, amount rupees 450. Show both of these things on the credit side of your cash account. Likewise, we have cash account here and the final amount is 16,250 in cash account. Show this on the debit side. Now, we have with respect to partners some information. Hari's capital account, partners capital accounts, realization profit, both you need to show it in partners capital account on the credit side. Likewise, we have Suri's capital account. Show this information on the debit side of partners capital. Preparation of partners capital account. First and foremost, let's bring down the capital of the partners, which is written on the credit side as by balance brought down. The capital of the partners is 10,000, 11,000 and 6,200. Now in realization account, we have got partners who have taken over the asset and the liability. So this we will mention in partners capital account. So first and foremost, we have realization account where the bills payable is being taken over by the partner Hari, which is rupees 5,400. We have land and building which is taken over by Suri. So asset being taken over, so write it as to realization account, asset taken over, amount is rupees 13,200. So he is taking over land and building. Followed by we have realization profit. So this we will show it in partners capital account. So write it as by realization account profit. We have already calculated and the amount is rupees 300 each. Then in balance sheet we have got profit and loss account which is mentioned on the asset side. So this need to be distributed. So write it as to profit and loss account. Amount is rupees 900. Distribute this in 1:1:1 ratio. So the amount is going to be 300 each. So that's it with partners capital account. Let's now do the balancing. Over here on the debit side we have got 300. On the credit side we have got 15,700. So let's write it as 15,700 on both the ends. Minus 300, we will get 15,400 written as to cash account, balance in figure which is paid off. In case of a debit side for Giri, we have got 300. On the credit side, we have got 11,300. So let's write the highest amount, 11,300 on both the sides. Minus 300, we will get 11,000 as the balance figure. On the debit side of Suri's account, it is 13,500. On the credit side, we have got 6,500. So we need to write the highest amount as 13,500 on both the sides. Minus 6,500, we will get an amount of rupees 700. So 7,000. So this amount Suri needs to bring in. So therefore write this as by cash account. This is nothing but the deficit amount which Suri needs to bring into the business. So deficit bought in. When you prepare in cash account, you need to post this information on the credit side. Likewise, when you're preparing the cash account, you need to furnish this information on the debit side. We need to bring down the balance of cash which is reflecting in the balance sheet, written as to balance bought down, amount rupees 2,000. We have bank balance, so write it as to bank account, amount rupees 4,000. Now you need to follow the realization account where we have made the payment through cash account for assets which are realized and the payment of liabilities. Along with that, we have the dissolution expenses. So let's begin from the credit side of cash account. So write it as by realization account. This is for liabilities paid by the business through cash account, which is rupees 2,400. We have dissolution expenses, which is amounted to rupees 450. Likewise, we have assets which are realized, written as to realization account, 16,250 for the assets realized. Now follow partners capital account. We have amount on both debit side and as well as on the credit side. So we are going to pay to the partners, that is by Hari's capital account 15,400, by Giri's capital account we are going to pay rupees 11,000. In case of Suri, he is bringing money to the business. So therefore, to Suri's capital account, this is the deficit balance. The amount is rupees 7,000. So that's it with the cash account. The balancing, if you do on the debit side, if you add all the amounts, you're going to get 29,250. Likewise, on the credit side, if you add all the amounts, you're going to get 29,250. So that's it with the solution, students. Thank you.